The Turbo meme coin sees pump after pump. It seems the top has been deactivated. For how long can this go on? You'll see in this video. Let's go. Welcome back to another episode of Philprints, your one and only stop for crypto, finance and trading. So what is Turbo? Well, on their website it says it's a meme coin made by AI for the people. And the website is actually very minimalistic. There's not too much information. It just says contract renounced, no taxes, total supply 69 billion, crowdfunded launch, all tokens in circulation. And then as an explanation to the AI part, it says Turbo token began as a bold experiment in cryptocurrency creation. Inspired by the power of artificial intelligence, the project's creator turned to GPT-4 with a simple challenge. Create the next great meme coin starting with a budget of just $69. Well, I have to say that sounds really cool. Of course, you can buy it on Uniswap and it's actually launched on quite some bigger exchanges. OKEx, Gate.io, BingX or Femex. Then there is some quote by the creator of Turbo, Red Mankind, and that's about it. The white paper doesn't have more information than the website basically. The Twitter account is pretty active, as you can see, nearly 50,000 followers, and the account posts daily. And this is the recent pump. We'll have a look at the chart later on, but before that, let's turn to my token demand analyzer and see where the demand is at on chain. Now, first things first is the creation of new wallets, which has a pretty impressive spike here, which is most likely by newcomers who just create a wallet with Turbo token in it. New wallet is most of the time mostly retail, so they're joining the party right now. Later we'll see if this is really only retail. Then the transaction activity gives us a little bit more insight. As you can see here, we have consecutive higher spikes, which are significantly higher than everything before in the last 30 days. And every time we see these isolated spikes here, this is most likely a local top or local bottom. For example, this spike here is on May 23rd, and this spike here is on May 24th. And this super big spike here, the highest point, is also May 24th, 17 o'clock. And if we have a look at the chart in the hourly view, you can see May 23rd, this is this local top here, May 24th, this local top, and May 24th, 17 o'clock, this local top right here. Then if we have a look at the Plankton wallets and the whale wallets, which for Plankton wallets means a minimum value of $40, and for whale wallets a minimum value of $400,000. And obviously there are way more Plankton wallets at this very moment, more than 18,500, and just around 40 whale wallets, at least on chain. So this doesn't include funds on centralized exchanges. And now what's pretty obvious is that there is an extreme rise here in Plankton wallets, but actually a pretty small decline if we zoom in the whale wallets. So it's definitely retail buying and whale wallets selling off a little bit. This is nothing out of the ordinary. Retail is jumping on the train in hopes to make more gains, and whales are selling into the big pump, or at least taking some chips off the table. Also, you can see the big incline here started on May 8th to May 9th and got even more vertical starting from May 22nd. So after we reclaimed this here, this was the point where retail started to buy in big. And then as it became way more vertical here on May 22nd, this was completely fueled by retail as well. On the hourly chart for the last 30 days, this becomes even more obvious. Here you can also see a little bit of a decrease here for whale wallets and the immense increase for retail wallets or Plankton wallets. But actually, if we have a look at some statistics for the smart money, or better to say the top 100 wallets, which are mostly owned by exchanges, you can see that when we look at daily activity, weekly activity, and monthly activity, they are mostly holding, but still buying, even today. More than 11% buying today, more than 12% buying on a weekly basis, and nearly 19% buying on a monthly basis. There is just a little bit of selling, so probably for rebalancing. Also, if we have a look at the return on investment chart here, you can see the yellow part here, 17%. This is no DEX buys. And this means this part here is wallets that have Turbo token in them, but don't have any transaction activity with a DEX. And this means the Turbo token has been sent over from a centralized exchange or another wallet. So this shows us this data we're seeing here on chain this is pretty significant, although it says here in CoinMarketCap that most of the volume comes from centralized exchanges. So around 30% alone come from OKEx, 38% from Gate.io, and 10% from BitGet. And for example, just 5.5% were traded on the Uniswap DEX. All right, so let's have a look at some technical analysis now. First and foremost, the token started out in May 2023, and it didn't look too great from the beginning until October 2023, when the altcoin frenzy started. And from that point on, we've got rally after rally. And this is actually the third big rally we're seeing right now. The first one gave us a 7x, the second one gave us around a 4x, and the current one is at this very moment up around 9x. What's interesting, the parabolic phase here started after an uptrend, and the last two parabolic phases started after a sideways range, which means there's even more interest this time around. Now, if we zoom in a little, we can see that we beautifully reclaimed these two important moving averages. So these were extremely narrow, we traded below them, then we slowly got above them, had multiple retests, we even got across, which normally is a very delayed signal, so not so significant. But when we see something like this, long sideways range, small creep up, multiple retests, then cross, then this here shows us it is likely that we will see a bigger rally after it. By the way, you can get this indicator for free if you join my Telegram group, link is down below. There you will get access to my up to now free community. And this is not just the indicator, but a 1-hour trading course that explains it and how to build your own strategy. So join while it's still free. This may change for new members in the future. Back to the charts. If we have a look at my Philprints reversal bands, you can see that we are consistently within them and even above the most outer band here. So this doesn't happen too often. The volatility is so strong that even the most extreme range is broken to the upside. This kind of momentum usually does not last too long. You can see this here, for example. We went above it, then had a small sideways range, inside again, and then we went out again. Now it's actually even 4 candles above it. So at some point we need a minimum of like a small sideways range or a small dip in between. Now, when will this pump end, you might ask? So we have to really monitor the lower edge of this solid upper band. If we close here, then this will likely be the level to watch, at least for candle closes below that level. And that immensely increases the likelihood for more downside. So if a token is this volatile, we could even see a close below it, then another little pump, but then again below it, and then the real leg down. For less volatile coins, a close below this level here, as an example, most likely wouldn't close again above it. But here for Turbo, with this volatility, this is actually possible. I think we can even demonstrate this here with the last parabolic move, which happened in March. So we're also pumping above the most outer range here multiple times. And then eventually here, we closed below the solid band. And as you can see, 2 candles later, we closed below this level. And then we knew the uptrend is most likely over. There will be no new highs. But as the volatility is so crazy, we pumped above it again, catched the liquidity here from these wicks, and then we went really down. But you can beautifully see how this level was very important. So it had this retest here, didn't made it above. Then we closed again here. So this would be another trade, you could say. But in the end, once we close below this level, even if we get a dead cat bounce like this one here, this just shows us buyers are exhausted and downside becomes now way more likely than upside. Now, this here is the very first rally of Turbo, and this took place in December 2023. And here once again, you could see the same taking place. This is the first candle closing below the band. We dumped below, we knew buyers are exhausted, the biggest part of the rally is over. We got a dead cat bounce, even closed some candles above the level, but then sold off to the blue MA. Very similar to the second rally we've just seen. Then once we closed above the level again, This was a nice trade, but same as in the second rally, this just took the liquidity of this week, nothing more. And from that point on, it was just sideways and down. And even in January, you can see that this level still is important. So these levels are immensely important. So we've seen in the last two parabolas, we have kind of a pattern. And if you're a subscriber for some time on my channel, you know I call this the DNA of a token. And this means we could repeat it. Of course, past performance is not indicative for future results. So this is of course not a certainty, but we should keep it in mind. So this means we could pump more, for example, then at some point close a candle below the band. And this will be our very important level. Then we might go below, see a dead cat bounce, go to the blue MA, for example. If we once again see a candle close above the level, this would be a nice trade. Might catch the liquidity and then we go down. So this would basically be a repetition of the pattern the last two times we saw a parabola. If you haven't subscribed yet, please ask yourself why and do it now. You really don't want to miss any of the next videos. As always, this was not financial advice. This was for Prince for you. Until next time, crush the markets. Goodbye.